CMBS is back. That's commercial mortgage-backed securities, a business some said was dead forever just 18 months ago. And the market's revival has lured in some new players like Cantor Fitzgerald, a firm best known for bond trading and bond brokerage. Cantor has partnered with CIM Group, a Los Angeles real estate fund manager, and plans to make some $5 billion of commercial property loans over the next 12 months. This morning, we welcome Cantor Commercial Real Estate CEO Anthony Orso.
Good morning, Eric.
Anthony, nice to see you here. Let's start with this question. Why partner with a money management firm in the form of CIM?
Well, I've recently been quoted as saying the timing is perfect to get back into the CMBS business, and at Cantor we believe that. However, in order for us to compete with the big banks like JP Morgan, Citibank, and B of A, we needed to find an outside partner to help leverage the capital that Cantor Fitzgerald had in order to compete, and that's what we've done with CIM.
So of the $5 billion that you plan to use for origination, how much of that is being funded by Cantor? How much of that is being funded by CIM?
CIM is funding most of the capital, but Cantor Fitzgerald and my management team is funding a good portion as well. And you know, when we look at what's changed today, we really have skin in the game. When you look at most of the big banks, they're playing with shareholder capital. We're playing with our own capital. So we believe that will help our investors think of our loans as more secure than perhaps those of some of our competitors. 12
months ago, you really needed support from the government to get a CMBS deal done. You needed TALF. Today, it's a competitive market again. The big boys are back in the business. JP Morgan, Citigroup, B of A, Goldman Sachs, Morgan Stanley. They're all originating loans, securitizing loans. You've been at Cantor for just about a year. Why didn't you get back into securitization a little bit earlier?
Well, the timing wasn't right a year ago, and the reason the timing wasn't right, values hadn't stabilized. Today, values are stabilizing on a national basis. In fact, here in New York, we're starting to see values increase. And for us, we believed until the value market had stabilized, we weren't feeling very comfortable making new loans.
Your team is mostly from Credit Suisse, right?
Mostly.
And that's where you came from?
Yes.
Okay. My understanding is that back at Credit Suisse, you did some notably aggressive deals, securitizations of condo conversions, for example,
yes.
The CND deals back in 2005, and some transitional stuff, rehabs, refurbishments, things that other people weren't doing. Does that mean that Cantor is going to adopt a similar sort of gunslinging strategy in its effort to compete with firms that have big balance sheets like a JP Morgan or Bank of America, for example?
Well, there was a lot of competition if you dial back the clock in 04, 05, and 06. Today, there's many less banks that are competing for loans, and there's approximately $1.4 trillion of loans coming due. That's roughly half of all commercial real estate loans in the entire market. So over the next 3 years, we believe there are plenty, what I'd call down the middle of the fairway loans for us to do without very much competition. And more importantly, at Cantor Fitzgerald, we have an enormous fixed income sales group. We cover over 2,500 institutional fixed income buyers. So we believe we have a better distribution team than most of the other big banks, despite the fact that we have a smaller balance sheet.
Okay, let's talk about down the middle of the fairway for a moment, because when people see an opportunity like that, they tend to crowd the trade. I mean, surely the golf course isn't quite that wide open, and if it is that wide open now, I can't imagine it's going to stay that way for long.
Well, with $1.4 trillion of loans coming due and roughly half the number of people that are in the CMBS business today than was in 06, we believe the fairway is actually pretty large. And the real question is, who has the best relationships? Who can deliver for their clients? We believe with a streamlined management team that we have at Cantor, we can be there for our clients and we can deliver quickly.
Anthony, one of the questions I know you're going to get from your clients is, how do you feel about the legacy loans left on Credit Suisse's balance sheet? You know, they may be trading at 40 cents on the dollar. People want to know that they're going to get a better performing product from you this time. What do you say?
Well, I think that was part of what investors asked themselves, like CIM, when they thought about partnering with us, because our track record at CS was, before we left there, we had sold just about every piece of collateral that was on the balance sheet from mid-07. So I think we demonstrated that despite the fact that the pricing on the loans that we sold was not what we had hoped it would be, we had in fact delivered results for CS and their shareholders.
Anthony, thank you for joining us. Anthony Orso, the CEO of Cantor Commercial Real Estate. It's a competitive market, and we wish him well.